This program was brought to you by PennyMac TPO and Power Plus, their next-generation broker portal that gives you more speed and control over the process. You can now disclose, lock, and manage your loan seamlessly from start to finish, all in one place. It's another reason why greatness lives here.
Welcome to The Interest. I'm Mike Savino. Opportunities are out there, and a new TransUnion study is showing us who some of those customers are and where we can reach them. We'll have more on that coming up, but first, we have to deal with more grim news in the industry. This time, it's Finance of America shutting down its forward retail division after failing to sell it off. The move means FOA's only remaining mortgage origination channel is its home improvement channel. FOA was trying to sell its retail operation at guaranteed rate. The two sides had entered a letter of intent and were negotiating on terms, but that fell apart and FOA notified the SEC on Thursday that it would instead shut down the retail division. The company also previously decided to halt its wholesale operations. In its SEC filing, FOA says it can focus now on its reverse and commercial originations, lender services, and portfolio management. FOA expects the closure will cost them between $145 and $164 million, including at least $8 million for employee severance and benefits, and $120 million in impairments of intangible and fixed assets. Certainly not a good way to start the week, but unfortunately things aren't getting any better if for the near term, at least if you ask the NBA.
At the NBA's annual conference this weekend, Chief Economist Mike Frattantoni told the audience he expects us to enter a recession, adding to the growing list of experts saying this.
And he was joined by Deputy Chief Economist Joel Kahn, who gave what he called a pretty bleak outlook for the housing market and origination. He expects volume to fall by nearly 10% from $2.26 trillion this year to $2.05 trillion next year. That would be less than half of the $4.4 trillion we saw in a historic 2021. Now, much of the drop is likely to come in the form of refis, which Kahn thinks could fall another 24%. Meanwhile, he thinks purchase volume will slip by 3%. If this all sounds like a terrible, horrible, no good, very bad day, well, the NBA says sunny skies are on the horizon. Frattantoni and Kahn expect rates to start dropping next year, and the economic slowdown could allow household income to catch up to where we are with housing prices. And with an estimated 50 million people in their prime home buying years, there's plenty of shoppers who are waiting for the market and the economy to return to normal. In the meantime, there are some groups of potential borrowers that you could tap into right now. We'll have more on that coming up.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.nemortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.nemortgageexpo.com.
Welcome back. While we need to face the realities of the current market, it doesn't mean there isn't opportunity out there. And TransUnion is identifying some specific customer groups that provide some of this opportunity.
Instead of just accepting that these are the trends that we have to face, what can we do in light of these trends and be proactive?
A new report identifies three specific groups: low to moderate income households, veterans, and the self-employed. TransUnion looked at consumers who were likely renters or homeowners going back to 2017 and found that 95% of the 121 million low to moderate income consumers on file are credit eligible for a mortgage. And 86% of the 10 million identifiable VA eligible consumers have a credit score of at least 620 and are also mortgage eligible. These are potential borrowers who often qualify for these special programs or are eligible for a government-sponsored enterprise mortgage.
It enables lenders to be able to make real value propositions to consumers that fall within those segments.
You can hear more from our conversation with TransUnion Senior Vice President and Mortgage Business Leader Joe Melman on The Principal, our daily podcast available wherever you get your podcasts. We'll be right back with what else is interesting today.
This program was brought to you by PennyMac TPO and Power Plus, their next-generation broker portal. Visit tpo.pennymac.com to sign up.
Here's what else is interesting today. A couple of weeks ago, we told you that the rotisserie chicken has been inflation-proof. Well, unfortunately, the same is not true for its cousin and the centerpiece of the Thanksgiving dinner, the turkey. Estimates vary on just how much more a turkey will cost you, but the American Farm Bureau says that it could hit record highs. And it's not just because of inflation. The bird flu has been devastating flocks all year. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.